Hi everyone. I am your economics teacher Anjali. In this video, we're exploring the meaning of transfer income and whether it is included in the national income or not. Later on we will cover examples of transfer income. Let's get started. There are two types of income in economics: factor income and transfer income. For understanding the meaning of transfer income, first, we need to understand the meaning of factor income briefly. This is necessary as factor income is included in national income but transfer income is not included in national income. Factor income means income received in return for factor services. When factors of production provide some of their services in the production process and get something in return, then it is called factor income. An example could be Mr. A laborer works on a machinery to produce a shirt. He gets money in return for his efforts. This is called wages and is a type of factor income. So in factor income, there is a two-way flow. A person gives some goods or services and, in return, gets some payment. Some effort is done to earn the income and, hence factor income is also called earned income. Factor income is included in national income. Now we come to transfer income. Transfer income refers to income that is received, without providing any goods or services in return. The income could be in the form of money or any other goods or services. There is no two-way flow. It is one-sided. An example could be when you give some money to a beggar. He is not doing anything for you in return. Beggar has not done anything to earn this money and has got money for free. There is only a one-sided flow of money from you to beggar. Though this is an income for the beggar, but it is not a factor income. It is a form of transfer income. Transfer income is also called unearned income. It is a unilateral concept. Transfer income is not included in national income. Here is a comparative table to understand the difference between factor income and transfer income. First, factor income is a reward for providing factor services, whereas transfer income is one-sided payment without providing any goods or services. Second, factor income is included in national income, whereas transfer income is not included in national income. Third, factor income contributes to production of goods and services in the economy, whereas transfer income does not contribute towards the production of goods and services in the economy. Fourth, the examples for factor income could be rent, wages, interest, and profit, whereas the examples for transfer income could be old age pension, scholarship, etc. Now we will discuss some examples of transfer income one by one. Suppose you give money to a beggar. This is an income for the beggar. But since the beggar does not provide any goods or services to you in return for money, so in economics, this is considered as transfer income. Such incomes are excluded from national income. Next we come to old age pension. Government in many countries gives a fixed amount of money, every month or every year, to people above certain years of age. This is known as old age pension. Suppose India government gives 5,000 rupees every month to people older than 80 years of age. This is an example of old age pension. These old people are not giving any services to government in return and hence this is a transfer income. Next we come to unemployment allowance. If government gives a fixed amount every month or every year to people who are unemployed in the country, then this is called unemployment allowance. An example could be government giving 10,000 rupees every month to unemployed people. The unemployed people are not giving any services to government in return for this monthly allowance, and hence this is a transfer income. Next we come to scholarship. Government or private individuals or institutions gives financial support to meritorious students to support their education. This is called scholarship. The students are not producing any goods or services in return. Hence this is a transfer income. Next we come to pocket money. When parents give some money every month to their children, then it is also a transfer income. Parents are just giving money due to love and affection and are not getting any economic services in return from children. Next we come to donation or charity. If you give some money as donation in a temple or for some social service, then this is a transfer income as it is one-sided payment. Next we come to winning a lottery. When someone wins a lottery, then he gets prize money without giving any goods or services in return, and hence it is a transfer income. Next we come to money paid by government to freedom fighters or their families. These are also a form of transfer income, as it does not contribute to production of goods and services in the economy. Next we come to awards. By awards we mean awards given by government to people, in recognition of their achievement, like Arjun Award for sports, Veer Chakra for braveness in war, etc. The monetary benefit that comes with such rewards is a form of transfer income, as these are one-sided payments and does not add to the production of goods and services in the economy. Next we come to compensation paid to victims of natural calamities or accidents. Natural calamities include flood, earthquake, fire, or cyclones. Accidents means accidents by road or rail in public modes of transportation. Due to natural calamities or accidents, people suffer huge losses. To compensate and support people, government provides them financial help. This financial help is in the nature of transfer income, as the recipients have not given anything to return for the payment of compensation. Next we come to taxes paid to government. People pay various taxes to government, like income tax or goods and services tax. Such taxes are in the nature of compulsory transfer payments. No direct benefit is received by people from the government against such payments and, hence tax payments are considered as transfer payments. Next we come to remittances to family by non-resident Indians. Suppose you stay and work in France. You send money to your family staying in India. This is a kind of transfer payment, as you are sending money out of love and affection to your family, and not against any production of goods and services. Next we come to insurance. People insure themselves against various losses like loss of life or loss of property like buildings, vehicles, or any other assets. When a person suffers a loss for which he has taken insurance from insurance company, then insurance company pays monetary compensation to the person. This monetary compensation is called insurance claim. The insurance claims are in the nature of transfer payments. There is no production of goods and services against such payments. Next we come to cash transfers by government. Governments in many countries do direct cash transfers to people below poverty line to financially support them. It is a transfer payment as the people receiving the money are not doing any production activity against the payment. Next we come to the compensation against war damages. When two or more countries are at war, then they suffer heavy losses of man and material. When the war ends, then one country, which is usually the losing country, is required to pay to the other country heavy compensation to compensate for the losses suffered. These payments are in the nature of transfer payments. Next we come to gifts by friends or family. You may give a gift to your friend on his or her birthday. Or your relatives may give you gifts at the time of your marriage. All such gifts are in the nature of transfer income, as these are given out of love and affection. These are not given in return for production of goods or services. Hence these are not included in national income. I have tried to cover many different scenarios of transfer income. If you have any other doubts in this respect, then please put them down in comments. Do keep watching for more such explanatory videos. Thanks for watching.